Yes.
All right, welcome everyone to CRInvestor and LowPro's Trading Plan Show, Episode 5. Today is, where are we here? April 26, 2014. This is CRInvestor, also known as, uh, also known
Canadian.
as Brian Beamish.
Yeah.
I'm showing on the screen right now is our trading plan show. Just a heads up to everyone out there, if you're sitting there with bated breath waiting for Landon, he PM'd me. Oh, there we go. We know we're on live now. We have to leave that YouTube show page up just so that we know that we're live, and so now we know we're live. All right, where was I? Landon's PM'd me a little while ago, told me that he's on the road with the family and he's running a bit late, so he'll probably come along here as I sort of work through my presentation today. We do have, and it's interesting because with the current trading on Bitcoin and sort of the malaise in the stock market, I have seen general interest in the market wane a little bit of late. So not a big surprise. Things might be a bit quiet today. It is a Saturday afternoon after all. And it was a pretty nice day out here in Vancouver. We do have Brian in the lounge with us today. Hello, Brian. How are you?
I'm okay.
You're good. Struggling through his Bitcoin trades. You can hear the heavy sigh in his voice. You're more than welcome, anybody who is watching on YouTube, to hop on TradingView or PM me through the Google Circles if you're in my tutorials circles to get me the or get the Hangout address from me. I'll go over and I'll post it here on the YouTube page, just so if you would like to be part of the lounge, you're more than welcome to pop in. And we do have a period for question and answer. So by all means, if you have questions, let's make sure that they're answered by the end of this program. As the theme sort of indicates on the screen, and the name of this show, basically this show I like to do on the weekends when theoretically everything's quiet and nobody's trading. I like to concentrate on things like trading plans and psychology and setups. In that it's theoretically over the weekend, it's a time for us to look at our plan, review how we did the previous week, see where it is we messed up, those kind of fun things. There are those that are trading away through the weekend, and by all means, if you happen to have questions about setups or any information that we talked about and how it can be directly applicable to your trading, then feel free to pop in the lounge as well and ask. Oh, I just heard something bling, so I'm not quite sure what that was. Oh, maybe that's over in TradingView.
No, you might. I think it's. Probably check
Somebody
it on the
pop in.
messages. No, it's
Oh,
just.
I see. Maybe I don't see. Terrible. Anyway, no big deal. Um, without further ado, basically, let's get into the first part of the broadcast. We're just, it was suggested to me recently that I ought to, just at the very beginning, thank everybody for their participation, and also let you know that by all means, you're more than welcome to come to the website, my website, therationalinvestor.ca. We actually have a group of people that do these shows with me. If you watch the shows, then you'll know today Landon is my assistant, and other days I have Joe, the Chasm, and Flibber. And there are a few people in the background that don't come on the shows in particular. But anyway, we're all going to work together to at least give you a web page that looks like it was written in the 21st century, all joking aside, that will have a lot of this stuff much better presented for you. But anyway, that's a project we're working on. If you do like the show and you do learn anything, you like using any of the indicators that have been given, trading ideas, anything like that, we love to get donations, and it's a great way to help us continue our cause. I've sort of been building a Bitcoin fund here to actually trade Bitcoins. Full disclosure, I'm just sitting in cash right now. My latest recommendation that I posted on TradingView, let's see if I had it here, I was back a couple days ago, 3 days ago, in fact, and my headline was long, slow grind back to the OTE long zone. So as you can see, based on this recommendation, I was in cash at this point, and down has come price. And by all means, if you want to talk a little bit about current price action and where things look like they're pointed, feel free to pop into one of my tutorial sessions, or just grab me on TradingView. But long and short of it here, still sitting in cash, just biding my time. And now I think those sales up at 5. I got some off at 512 right up into this OTE. I'm feeling pretty good about that, so not a bad idea. My ultimate goal, as you can see, there's a higher time frame OTE down here at 401, and if this bear ABCD plays out the way I think it ought to, we should see that level, but only time will tell, as they say. Anyway, the point of the matter here is if you do like what you see, if you've learned something, if you've benefited, here is my Bitcoin address wallet. Feel free to make a donation and help the cause. All right, so enough of that. All right, in the news, personal experiences over the past week. Landon and I like to sit and joke about our trading experiences. I suppose you could be my guinea pig this week, Brian. I was trading.
Man.
Oh boy! All right, Brian. So tell me, how did your past week go?
Okay, well, I guess I actually shorted at, if you look at the charts, before the big drop, I shorted at 490.
Good.
It dropped out to about 470 before it went back up, and I was thinking it'd probably go for a correction all the way back to like 50%. So actually, I sold out early, not expecting it to go down further. So I kind of missed that second leg down.
Oh well, and I guess we can talk about trading plans and what your plan said you ought to do, if you have a plan. Hint, hint, hint. But all in all, so it was a profitable week for you on balance?
I guess. And then I did like stupid stuff because I didn't do a plan and mostly lost most of it. So that's why I'm here, to learn about trading.
Well, that's good. And the good part about all this, right, is that as the old saying goes, really, we don't want to give you fish. What we want to do is teach you how to fish. And if you know how to fish, then you can go off and catch your own living. So that's good to hear. I like that. That actually dovetails nicely because, the first thing that I suggest everyone do is just take a moment, and I'll pop this in the hey, there's Landon. Hey buddy, how you doing? I think we can hear him. Come in, Landon. You sound like you're on Mars. How's the weather on Mars?
Oh, hey.
Hey, oh, hey, hell.
Hey, can you hear me?
Yeah, I can hear you now.
Yeah, finally got done with the baby.
Well, hey, you're never done with the baby, trust me. But anyway, good to hear.
Hey, what's up?
Why don't you get settled in and just sort of get up to speed, and then I'll check in with you in a few minutes, okay? Does that sound good?
Sure.
Are you ready to go now?
Oh, well.
It's not so much
yeah, whatever.
All right. Well, this is the first half hour of this show, and usually I like just to take some time and get settled in. And we have somebody who was in one of the tutorials this morning, Brian, in the lounge here. So he's been sort of helping me out, keeping things on track here. Well, I got your message that you figured you were going to be a little bit delayed, so I think we made it. Tell me about your
3-4 hour drive.
Oh, really? Where'd you drive from?
Oh, wait, where do I start? Oh, I just back over to see family and show off the baby weekend thing, you know.
Yeah.
But
that's the good karma.
Let's see. Definitely. I'm pulling up my chart here, getting everything rolling.
All right. Well, so I'll just sort of continue along my journey here, give you a few minutes, get all set up, get your screen share going, and then I'll come and bug you, okay?
Okay.
All right. So as I said earlier, I think it's a good idea if you're relatively new to the market to take some time and visit this. Let's see, how many pages is it? 72 pages. I wrote this short course on base for somebody in the continuing education program suggested that I ought to write a little course on how to invest because I've been doing this for so long. And as I said, it came out to about 70 some odd pages, and it just sits on the internet. It's a document. I haven't copyrighted it. I appreciate if you don't like steal the information, but basically it's just sitting there. I've posted the link in the lounge, and now I'll take a moment and just post it in the YouTube channel. So they're just sitting there. Lots of really, really good information. But the thing I'd like to talk about today in particular is actually what does a trading plan look like? In the appendix of this course material, I include what I would consider to be a very realistic trading plan. One that you're more than welcome to use on your own. I mean, really, it's no big deal to me. The important thing is that you do it. So, just very briefly, this is on page 55 of this document. And, what are some of the things that a trading plan should include? And to begin with, I think it's really important in every trading plan to actually write down what your objective is. I mean, what is it you're actually trying to do? So that you actually quantify what your objectives are. And then once you've actually written down those objectives, then, when you actually look at the words on the paper, you can say, well, is this really realistic? Like you could say, well, my objective is to make $1 million. Well, when you write that down, over time, you look at it and you say, is that really realistic? I mean, what kind of capital am I working with? They say, sorry, Landon, go ahead.
I think percentage goals can be a lot more reasonable.
Yeah, well, so
say like a certain percentage per day.
Yeah, that's perfectly realistic. I guess the important thing here is that on the plan, you actually state what it is you want to do. You can always talk to your financial advisor. You can talk to friends and relatives. You can come into one of the tutorials, and we can discuss, all sorts of different strategies. Like Landon said right there, a percentage of assets. Keep in mind that, a professional portfolio manager that can outperform the S&P 500 by just say 1 or 2% on an annual basis is a very, very successful portfolio manager. Most fund managers, most professionals in the marketplace, the simple fact of the matter is that most people underperform the S&P 500. And just those that can actually outperform on a consistent basis are a rarity. So, just keep that into perspective. Now, if you're trading $5,000, obviously, like a 7% return is what, like a few $100. That's a lot different than if you're dealing with $1 million, right? And looking to get those same returns. I mean, maybe you take a one-shotter on your 5,000 and you make $1,000. Woohoo! You're up 20%. Can you do that realistically day in, day out for the rest of your life? That's another question altogether. Anyway,
In Bitcoin you can.
I beg your pardon?
I said in Bitcoin you can.
Well, yes and no. I mean, I'll hand it to you, Landon. You and Flibber are very impressed. Have impressed me immensely, and I work with a lot of people who have a hard time making any money at all on a consistent basis. So I would say you should be considering yourself the exception, not the norm. But anyway.
But it's just because we immersed ourselves in such an emotional and turmoil environment that we got used to it relatively quickly.
Yeah, and there is a little bit of sort of sticker shock when you first enter this game. Like most assets on a stock market, like if I just pull up my quote screen, right? This is just a nice, simple, broad market measure here. And I've got this stock's up 2%. This commodity's up 0.3%. This stock is down 1.5%. Like that's very typical, right? If you actually see a market that's moving more than, say, 2% on a day, that's usually abnormal, right? And some of these are fairly big, 4%, 6%, right? And then we get to Bitcoin, and these things move in big chunks. The other day I saw this thing was down 10%, and on a major asset, that's a substantial move. So I can understand there's just a bit of sticker shock alone just entering the Bitcoin arena. It can be pretty wild stuff.
Yeah, and the day before that we had surged up. What was it? Nearly I think 40%.
What?
So and that was yeah. Well, in like 2 days, since that bottoming out.
Oh, I guess 340, right? 40% of that's $150, eh? So 340 to 500. Well, that's a pretty substantial move.
Actually, I guess it's more than 40. Yeah, we topped out at 540, something like that. So just a little more.
Yeah.
Jesus, nearly half the value right there. Like.
Yeah, and what's interesting is William Gann would say that was exactly what's supposed to happen. So, but that's a whole other conversation.
Yeah.
All right. So where were we? The trading plan. So, define what it is you actually want to do. And like I said, that's and put those objectives into perspective. Peter Lynch, for example, was a famous fund manager in New York, and he did, I think it's like 32% compounded return over 15 years or something. And if you calculate, even if you start with like $10,000, if you calculate what 33% return compounded over like 10, 15 years is, you come to a very big number. So you don't need monster returns to make this worthwhile. What you need is consistency, realistic objectives, and then just a cookie cutter approach that doesn't get you emotionally involved, and then, the setups that I talk about using, basically, the setups I like to use are very mechanical in nature, and so as a result, I actually remove emotion from a lot of my trading decisions. Next part of the trading plan that I think is important is I think you should always have an idea of what the sort of broader trending implications are of the market. Because, it's one thing to be a growth investor during a fear cycle. I should back that up. It's one thing to be a growth investor during a greed cycle, right? And like the .com stocks were a great example of growth just gone wild in the middle of a greed cycle. And you know, if anybody's out there who actually lived through that experience and traded through it, you'll know that it just got so stupid after a while.
Doorknobs.com being valued at $100 million.
Yeah, I mean, the list goes on and on and on. The best story I thought was Pets.com, which never actually did anything, and ultimately went bankrupt. But the classic story in Canada is a company called Nortel Networks that at one point represented more than 35% market cap of the entire Canadian stock market, and now, just crazy.
Wow.
One stock,
really?
right? Oh yeah. And now the company's bankrupt. It doesn't exist anymore. So I mean, it's just sad.
Obviously, a third of Canada didn't fall off the cliff when they went bankrupt. It was, it was just not real, non-existent for those prices, right?
Well, what ends up happening, right, is that the indexes are actually manipulated, right?
Mm-hmm.
I don't know whether you know that or not.
Yeah.
But our stock indexes, what we actually look at on the TV or the newspaper, they're actually quite finessed, and they're not actually very realistic. So what ends up happening is, as names sort of come into favor and go out of favor, they actually get included in these indexes and then kicked out. And so the indexes have the luxury of constantly rebalancing. So, while Nortel was going through sort of its bubble phase, it was included in the index and its market cap just went to ridiculous levels. And what's interesting is Canada is a commodity proxy. So you actually had a Canadian stock index making new 52-week highs and new all-time highs because of Nortel, even though it shouldn't have, right? Because that was a greed asset cycle, not a fear asset cycle. So that means that commodity assets should be out of favor, so the Canadian stock index should have been underperforming. So the way the sort of fund industry and the way the stock market engine operates was they sort of shuffled the index around through that growth phase to make sure that high-flying growth stocks were included in the index. So, keep in mind, these silly indexes, they're very manipulated. But anyway, that's another conversation. So the point, just getting back to the trading plan. So what part of the fear-greed cycle are we in? And if you had taken my courses and studied all of my materials, then you would understand that we are in, the 17.5-year fear cycle, which of course should come to an end somewhere around the third quarter of 2017. This dot should actually be right about here now, so it just goes to show how long ago I did this. So the dot, we're getting closer and closer to this cycle peak. So we should keep that in perspective. When we go into these cycle peaks, things can get a little bit nutso. So what part of the fear cycle, what part of the fear-greed cycle are we in? Well, we're about 3.5 years away from a fear cycle peak. And I think every investor should understand that. What are my expectations for the next 5 years? Well, if we look at the TradingView charts, I like to talk about the US dollar index as our paper asset proxy, and this 17.5-year cycle, here's 3.5 years away. So really, if we're expecting a bottom down here and the fibs seem to suggest that we ought to head down in that area, then we're in for some real fireworks here over the next few years. So in our trading plan, we should basically say, things. What are my expectations in the next 5 years? This is a fear cycle peak. My expectations are things are going to get a little crazy out there. And I think that that should be just realized. You know, this is not a calm, normal market. We're heading into a euphoric peak where things can get really nutso. So does this kind of environment favor any particular sector or strategy? And, you know, we're not here talking about Bitcoins for no reason. We're here talking about Bitcoins because Bitcoins are hard assets, and we're in the middle of a paper asset free fall. So, you know, clearly just the fact that we're talking about Bitcoins and that's so much of our focus, you know, again, does this favor any particular sector? Yes, it favors the commodity sector. It favors the hard asset sector. It does not favor the paper asset sector.
You would still consider it a free fall right now?
I would say we're actually accelerating into the free fall. We haven't actually started going into free fall yet. No, I would say that the inertia is building. You know, this U.S. dollar chart. You know,
Yeah.
as long as the White House is dominated by a Republican, a Democrat president, that should be U.S. dollar bullish. So what you've seen over the Obama years is a consolidation within this broader secular bear market. And so my hunch is that as we get closer and closer to the end game of Obama's administration, the inertia for U.S. dollar bearishness is going to start to accelerate. Does that answer your question?
Well, let's see. I'm looking at the time scale here. You don't see any of Janet Yellen and the Fed's talk of actively tapering, being a little more bullish on the U.S. dollar.
I think that we're in a secular bear market, and that talk has halted the downdraft that we were in.
Mm-hmm.
And I wouldn't be surprised if I think that, believe it or not, I think this whole quote-unquote taper talk has done its job. You know, there's economic data, you know, like if you go to my trading room page here, and
I mean, of course, it's bearish for the equities, but I mean, it would be a bullish thing for the actual dollar, I would think.
Taper talk is bullish in this type of environment. If they start saying that they have to start turning the printing presses on even more, I mean, keep in mind that they are still pumping more money into the system, right? It's not they're talking about tapering, right? They're not talking about actually raising interest rates or not, you know, raising interest rates.
Well, they are, but they're also paying off banks right now to hold them on reserve. I mean, it's not being filtered into the actual economy on that side.
Well, yeah, and you've heard me talk about that before, that the Fed's job is to keep the system going. There's a reason why these banks were in as bad situation as they were, right? I mean, they lent a lot of money to people, and those loans went bad. So the Fed is basically spoon-feeding the banks and guaranteeing their profits to keep the system going, you know. So, and I like to point out that, you know, obviously the housing market has been the dominant trend, and you know, the dominant driver of our economy for this past cycle. And you know, the Fed is very concerned about the housing market, so they artificially kept rates low and did lots of stimulus. and if you can see my screen right now, that stabilized the housing market. And then all of a sudden, the fourth quarter of 2013, first quarter of 2014, the housing market has collapsed. The housing mortgage applications have collapsed. And so with no new buyers coming in, the inventory of houses, unsold houses, is starting to rise again. So here's that double bottom you see on the there's the double bottom. So in essence, the fight to sort of maintain the housing market is waning. So
yeah.
that,
and also, if you're planning on buying a house, you might want to wait a few more years.
Well, and that's a sad thing, right? I mean, we were talking to Julian the other day, and he's got a buddy who's out there buying a house right now. And we're like, what? Are you serious?
Yeah.
People still go and spend money. So anyway, all right. So where was I? Zub, zub, zub. All right. So what part of the cycle are we in? What are my expectations for the next 5 years? Does this favor any particular sector? Are there any sectors to avoid? Right? And we're here talking about Bitcoin, so obviously we've already made those decisions. But the point here is that these are very valid questions, and you should, in your trading plan, basically have those laid out. The reason why I'm investing in gold is because of this, right? Simple as that. All right. The next thing in your trading plan, and this is a little bit more difficult of a question to answer, because every trader is different. And last week's show, Landon showed us a nice 30-minute setup, I think it was, on Bitcoin that had a bullish momentum divergence. It was into the OTE, and it put in a moving average cross. And you put all three reasons together, and it made for a very realistic trade setup. And sure enough, the trade setup worked very well.
Could have put 5 or 6. Actually, even better.
So the point of the matter here is that in your trading plan, right, you really should at all times be focused on just a few criteria. What are those criteria that you like in stock investing, or Bitcoin investing, or currencies, or bonds, or whatever? What are the 3 independent reasons that are going to get you to pull the trigger? And you really should have these written down. Like I did today I worked on another tutorial for my building tutorial list, and I worked on the candlesticks, and I finished this tutorial with just a nice summary that, this happened to be the US dollar index, and it had gone through a nasty bear market, and, 3 perfectly realistic reasons to do a trade are, Willie was stupidly oversold, so we knew that there was going to be some sort of bounce, and you certainly didn't want to be selling into that. We had a bull momentum divergence on this last leg down. So there's reason number 2. And then reason number 3, and if I can zoom in here, this seminar was all about candlestick patterns, and this is a harami, where you basically have an inside bar, where this bar is entirely encompassed.
Ouch, I think he disconnected.
Hey. Are you there?
Yeah.
Can you hear me?
Disconnected.
Oh, that's not me? That's him?
Yeah, that's him. I'm here.
Oh, okay. Because I think my laptop is overheating. And I might be out
What
here
laptop have
too.
you got, man?
Yeah.
Oh man,
Well,
like
it's
I was saying. Oh. Wait, is he there?
yeah.
Over Brian.
For some reason, I just noticed my fan isn't working, so that's why I thought it was me. And I normally don't use my laptop. I got a desktop at home, but I'm away right now. And then now he's gone, so the whole thing's just, yeah. It's one of those weeks. Oh man.
Yo, Landon, you should be looking to buy a. I can recommend you a laptop to buy if you have the money, because I've been like looking at shitloads of laptops to buy, which is why I kind of like wanted to get money
There he
from
is.
Bitcoin. Oh, here he is.
Hey, Brian.
Oh, I'm back.
Hey.
Yeah, so, and this is, I tried to do one of these shows just on my own the other day, and this exact same thing happened. So thank goodness I'm not flying solo here.
Oh, and,
So
and it's funny you said that, because as soon as you like clicked off, I actually thought it was me, because I got my laptop out and it's overheating because the fan isn't working for some reason. So I might not be able to stay on here much longer. This thing might kill it.
Okay, well, you just try your best. Whatever happens, happens. And by all means, don't push it. If you think that your computer needs a break, then so be it.
I'm normally at my desktop, but I got my laptop pulled out for this one.
All right, and hold on. All right, I had to sneeze there. Sorry about that. All right, so I'm not quite sure where I DC'd, but I was talking about the three setups, three reasons for taking a setup, and I had just outlined how in the tutorial that I wrote today on candlestick trading, I finished the tutorial with just the basic idea. See how you zoom out. There we go. This happened to be the U.S. dollar index. We had a stupidly oversold condition. We had a bullish momentum divergence. And then reason number 3 was we had a nice Harami reversal bar. And so, put the 3 together and you have a very justifiable reason to do a trade. Oops, what happened here? What has it done? Isn't that interesting? So I wonder how you reset the zoom.
Go to view.
There we go.
Oh.
All right. Like this trading plan here, identifying market state. We had panic selling. Willie was stupid. MACD bullish divergence. Moving averages far apart. Stock entry, bullish Harami was the candlestick setup, and then all the orders go in automatically. Just getting back to the trading plan, what are your 3 individual reasons for doing a trade? And those reasons can be fundamental, they can be technical, they can be quantitative. Really, I have no bias on what your reasons are. The issue here is, do they work? That's really all that matters. All right, now, just finishing off, sort of talking a little bit about who I am, what it is I want to do. Last part, and Landon and I sort of talked about this. Are my expectations realistic and achievable? I happened to do a webinar this past week with a gentleman who's a hedge fund manager, and very, very interesting, very knowledgeable gentleman. And he was telling us about managed futures markets. Let's see, where do I have it here? Where did I put it? Here it is. Managedfutures.com. Company is called Altegris. Very good website to go to learn about how actual professional futures traders and managed futures. These are serious people, right? Managing billions of dollars. What's fascinating about them is that their actual percentage accuracy is only about 40 or 50%. The key is that when they are right, they make consistently more than 2 to 1 over what they lose. And you're more than welcome to go to this website and learn all about the managed futures industry. The point here is that this comes right back to, are my expectations realistic and achievable? Ideally, I would like you to only take a trade where you see the minimum reward that you're going to take for the risk that you're going to take on the trade is twice what you're going to risk. You know, the bot setup that I espouse to, it's a 3-to-1 reward over risk. What I see, and I often do this in my own trading, is that traders will say, oh, I've got an 85% accuracy, but they end up booking their average loss is way bigger than their average gain. So they end up booking like 5 or 6 trades that are maybe 5 to 10 ticks in profit, and then they'll book 2 or 3 trades that their average loss is like 30 ticks. So you put it all together, and they actually end up being an unprofitable trader. Yes, they have a high degree of accuracy, but at the end of the day, they don't actually make any money. So, you know, very important that your expectations are realistic given the amount of risk that you're willing to take. And, you know, that's a whole conversation about setups. You know, the next part I like to, so, you know, this all talks about sort of CRI's rule of investing #1, where, you know, the analytical system that you use is accurate at least 66% of the time, and it spits out a 2-to-1 risk-reward ratio. Rule #2 is all about money management, and frankly, within your trading plan, you should definitely have a part about what your risk tolerance is. So, you know, I've just put here, for my risk profile, I am willing to risk a percentage of my assets, or an actual dollar figure. So, you know, my attitude is, you know, let's say you had $100,000 in total net worth, of which maybe 50 or 60,000 is tied up in your home equity. You know, maybe another 10,000, 20,000 is spread out over, you know, various assets like cars and boats and cottages and things like that. And then maybe you have another 20, 30,000 in actual market equity, you know, stocks, bonds, mutual funds, whatever. You know, of that 20, 30,000 that you have in, you know, you call it retirement savings, whatever you want, you know, what percentage of that assets am I actually going to trade with, right? And what am I going to invest with? And then, you know, what is that dollar figure actually, what is that dollar figure? You know, is it $5,268? Is it $19,724? The point is that you should, before you even start trading, know exactly how much money you have to work with, you know, which is your stake. And then, you know, according to my rule, you should never risk more than 5% of that stake on any one single investment idea. Now, you know, my personal feeling, I like to sleep at night. So if I have a trade on, I don't really want to see that risk, you know, in jeopardy. So, you know, maybe what I'll do is, you know, maybe I'll take 5% of my stake and I'll put it into something, and I'll say, you know what, I'm just going to risk the whole thing. If it goes to 0, well, so be it. That's perfectly fine. There are others who say, you know what, I'm going to risk my entire stake, but if it goes against me more than 5%, then I'm going to get out of the trade. That's perfectly fine too. I mean, I don't personally like that strategy, but that's perfectly fine. Usually, most of us fall somewhere in between those two extremes. You know, Landon, I think he likes to take the, I'm going to risk my whole amount of money, and I'm not going to let it go more than 5% against me. And I think that number is actually pretty high for him. But, you know, so he's on that end of the spectrum. One final critical question to every trading plan, and believe it or not, it's far easier said than done. After I've done all my homework, after I've come up with my reasons for doing a trade, after I've figured out whether I have a realistic risk-reward ratio, after I've calculated how much money I have to work with and what's a realistic, you know, risk on the trade. The last question, and unfortunately some people, including myself sometimes, simply can't answer yes to this, but you have to ask this question. Am I ready, willing, and able to commit to my plan? And what I end up seeing happening, and it sucks because it happens to me, it happens to others, I see it all the time. It's a classic human failing. Is you come up with your strategy, you come up with your levels, you're like, yep, I'll buy it as soon as it gets to there. Then when it gets there, your human emotions take over and you do crazy things like sell it at a menial loss because you just got scared. When your trading plan all along said the reason why you were buying there and those conditions have been met, and your trading plan said specifically how much you were going to risk, and you ended up abandoning the trading plan and just giving in to human emotion. And trust me, it happens a lot. So you're not alone. It's very, very common, and I make that mistake too. So trust me, even guys who have been doing this forever make that mistake. So that's, in my opinion, what a half-decent looking trading plan looks like. It's fairly simple. It should be, you know, something that you can recite in your sleep, you know, nice and easy. I'm a fundamental trader. I like trading fundamental models. I love price to book value. I love price to earnings growth. Well, so be it, and it goes. You know, you can include, like, in sentiment, you can say, I will only buy when everybody else in the stock market is panicking. That's a perfectly realistic criteria. Or, you know, if you're more of a trader, you can really drill down, like the tutorial I did here on the candlesticks, and say, you know, I want to see Willie Stupid. I want to see a bullish momentum divergence. And lastly, I want to see a specific candlestick pattern. That's perfectly fine too. Long and short of it here is you just have to be comfortable in your own skin with that model. And like I said, are you ready, willing, and able to commit to your plan? All right. So it's about 10 to 6. I think I've done a nice presentation today. Oh, it looks like we lost Landon. That sucks. Maybe he'll be back. Maybe he won't. Let's see. All right, so usually we talk for about a half hour or so just to get comfortable. Because Landon was away today, we sort of skipped that a little bit. I went into my presentation at about a quarter after, so it's about 10:02. So I think that's about right. What was the big message from me today? Big message today is, do I have a trading plan, and what does my trading plan look like? I recommend, if you don't have a trading plan, you can go and, like I said, this is an open document, so you can just pull it down. You can cut and paste and copy this into your chosen word processor. It looks like you can print it, whatever you want to do. My advice is, if you're not trading with a trading plan, trade in a trading plan. All right. Here's some interesting things. So from YouTube, we got the docs link isn't working. Sorry, the file you've requested does not exist. Fed's job is to keep the illusion alive. You're telling me more of the Fed Yellen is featured in this recent documentary, Put Locker. Money for nothing inside the Fed Reserve online free Put Locker. Yes, we can hear you. Okay, good. Well, I thought I'd just read those out loud. Hopefully the Google Docs is working. You know, I think it's a relatively new service that they've opened up. So it should be. I do see somebody has been able to access it. So hopefully that's okay. Let's see. Okay, so you know, I think that's basically the summary of the presentation I wanted to give today. Today was all about trading plans and creating them, and what should they look like. You know, in my trading forum, for a long time I did a blog on crude oil because I basically trade crude oil for a prop firm, although I haven't been doing very well lately, but that's a whole other conversation. You know, in my blog, I actually wrote out what my current trading plan was. You know, this is the last time I posted it. So, you know, you can actually see what a trader's trading plan looks like in Technicolor here. So what's my mission statement? What is my edge? How do I get my edge? What can I risk? What am I, what does it say? What I'm expecting to make? How confident am I in expectations? How often do I expect to trade? What are my expected profit objectives? You know, and it's a nice, simple plan, and you know, that's basically what I was expected to do on a daily basis when I was trading. Just as simple as that. All right. Okay. Who's this? Hey, I might be late for the show. Okay. I don't know whether he's. It was 45 minutes ago, so I don't think he's there anymore. Okay. You know, I think, you know, if Landon's having connection issues, and it looks like it's a relatively quiet day, then, you know, we can wind it up relatively soon. This was an hour-long show. You know, that's, I think, perfectly acceptable. Brian's in the lounge here. Brian, has my talking put you to sleep?
No, I'm actually, you know that trading plan you had for your crude oil? I'm trying to find it on your website because I want to have like reference to an actual trading plan.
Yeah.
You can, paste that.
So you should go to the trading forum page.
Okay.
And then you can click on day trading blog. And this is just a screenshot of it, so it's not, you know, it's not really the best rendition. I don't really like to give away all my gritty details. I just sort of put it there so people could know that I had one. But if you go to the actual blog itself, right? So if you're on that web page and you just click on the purple header, you see the purple header changes here? And then you just click on that, it takes you to the Blogger blog site. And then you scroll down, you get a much better looking view of that trading plan. Make sense?
Wait, go back to where you clicked the purple link. I'm trying to find that. Sorry.
So on the trading forum page, so like here's the home page, right? And then right up at the top, you click on Trading Forum. That takes you to this page. And you click on Day Trading blog, right, which takes you to this here. And then the header, it says CRI's Day Trading. You see that right there, the header?
Yeah.
Or you could click on the actual title. Doesn't really matter, either one. If you click on the header, it takes you to the heading. So you can see every single post that I've put here. I haven't updated this in a while because, frankly, my crude oil trading's just been shitty lately. But you can see week after week I posted my trading plans, what my setups look like, you know, everything. I did this religiously for quite a while. So, if you are curious as to what a typical day trader in crude oil looks like, that's pretty typical.
Thanks.
So, I do see we have a couple people on YouTube viewing the show. Do you guys have any questions over there? I don't know what happened. Did I lose the actual show page? There it is. Oh, there's a few people watching. I did this religiously. There we go. You said you were all fiat. When are you looking to get back in? Oh, I guess you're talking about Bitcoins. I would ideally like to see this OTE level traded to here, this 401 area. That would make me feel comfortable that, at least we're going to go down and test these lows. And if we do that, then maybe we have a nice W pattern forming here. So ideally, what I'd like to see, and just excuse my sort of artist's free hand, but I'd love to see us come down and do something like this. If I saw that, then I would love to jump all over, this breakout here. Ideally, we get some sort of setup that gets me long right in there. That would be best. So, does that answer your question, Spencer? Well, I'll keep my fingers crossed and hope that it does. Do we have any questions? And, that's cool that you could ask me, Brian, about that trading plan. Do we have any more questions that are trading plan related? Trading psychology, all that kind of stuff?
Probably not. Just, I guess the probability of it breaking 400.
I don't know, you got a coin? I mean, the fascinating thing about this game that I've really come to learn over the past few years is that no one really knows the certainty of anything. What we're really dealing with here is, and this is very hard for new traders to understand, is that people that trade for a living, they fully expect to be wrong like 40% of the time. And that's a pretty big number. Let's say you do 20 trades in a month. That's just one trade a day. That means by definition, these guys are expecting to be wrong 8 of those 20 trades. But the ones that they're right, the 12, they pay for the losses and then some, right? So at the end of the month, they're profitable, and they don't assign any ego to the actual trades taken. I was listening to a guy, a quantitative analyst guy in this webinar, and he was saying, I'd be willing to bet dollars to donuts that if you took a Nerf football and you just drew a circle against the wall, and at a very specific time of day, every single day, you threw the Nerf football at the wall just randomly. If the ball landed in the circle, you bought the S&P. If the ball landed outside the circle, you sold the S&P. Under the premise that you will look to take a 2-to-1 reward over risk taken on the strategy. And he said in all confidence that, even if you're wrong 60% of the time, you still end up making money and beating most of Wall Street. So it has less to do with your percentage accuracy as it does with how much you get paid when you are right. Isn't that weird? Oh, did I DC again?
No, you didn't. I'm just trying to think of a plan that works for me,
Well, it's tough. That's a hard lesson to learn. I mean, because we as humans, we want to be right. We attach a lot of ego to our setups taken. And it's emotionally, it's very, very difficult as a trader to go through a losing streak, right? Because you just have to believe in your fundamental model that says that you're right, 66% of the time. That's my CRI's rule number 1 on investing, is you got to find a model where 2 out of 3 times you swing the bat, you're right. There's a lot of floor traders and stuff who are like, wow, 66%, that's pretty high. So, even at those ratios, a lot of the pros think, that's asking quite a bit. But I'm fairly confident in the 66 number. The key, though, is that statistical models always have aberrations. So, if you had, let's say, 5 inputs into a statistical model, and 4 of them were right and 1 was wrong, does that mean that your model is 80% accurate? Or did you just go through an aberration where you just so happened to hit 3 or 4 in a row that were winners? Most statistical models need at least 20 or 30 inputs before the data is even relevant. If that's the case, let's say you had to have at least 20, if you're running 60% accuracy, then that means, like I said, 8 of those trades are going to be losers. Now, what happens, and this is perfectly realistic, what happens if the first 3 trades you put on are all losers? Bang, bang, bang. All of a sudden you're down. Let's say, in my scenario I was talking with earlier, Brian, I like to risk $150 on a trade. So right out of the gate, you're down $450. And then all the human psychological crap starts to kick in. I'm a failure, I can't do this, blah, 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 blah. When basically you might have just run into a statistical anomaly. And that happens. So, the key, I think, is, and that's a hard thing to learn as a new trader. I know there are some people that are espoused, oh, just always book profits. Just be sure to always book profits. I don't know whether I necessarily agree with that strategy. Sometimes, actually, it's healthy to take a loss. But anyway, that's a whole other conversation for another day. All right, so how are we doing over on YouTube? Let's see how these guys are doing. Is quite thin, around 400. 420 has a lot of support. I haven't actually looked at the order book. Let's see what it has to say. Moosh. And, there's a number of different ways to look at the depth of the market. We'll just take quick boo here. This is bit stamp, so let's go over to the Bitfinex. And what I see on depth, 455, we got some chunky bids, and 450, 440, 35. These are pretty well stacked up. I don't think you can infer a heck of a lot of information from this depth information. Maybe correct me if I'm wrong, but I don't really see a lot that I could trade off of this. It just looks pretty normal.
You can check the order book on Bitfinex, because yeah.
Oh, you mean actually on the site?
Yeah.
So this stuff down here, you mean?
No, there should be scroll up. There, you see the top right corner on the top that says order book, just above where it says account overview.
Right here?
Yep, and I will show you the order book.
So you're saying the bids are pretty thin down here? Wow, look at that. Is that 630 coins? 422?
Yeah.
And then 900 at 420, 560 at 416. And that's thin, or is that thick? That looks pretty thick. I don't see a lot of other depth.
He's saying beyond, like around the 400, it gets thin. People expecting it to stop at 420 is what I think he's insinuating.
Yeah, that would make sense, but the problem is, right, somebody can pull this bid at any time, right? So you don't really know whether that's actually somebody who really wants to buy there. Having said that, I think I would generally agree with that. I don't see any reason to argue that. When I look at this, believe it or not, I still think this thing's trying to rally up into this neighborhood. I think we did this 15-minute chart earlier. We have these bull ABCDs working here. My feeling is we need to get up into here. I did an OTE. I'm not quite sure why. Oh, you know, it's this. I don't understand why TradingView does this. Where every once in a while you draw a fib, and you can see they just shoot the lines off to eternity. So theoretically, there's some levels here. If we, what happens if we go? Tables, we'll center them. See what happens. I guess I have to go remove. We'll draw a new one. Doink, doink. And this is very rough. I don't know whether these numbers are right or not. Anyway, so our OTE short sweet spot right now, let's move these back over to this axis. Right, is 480 to 491. I mean, I would ideally like to see it get up into this red box here. And what's interesting is that this is this last bought long setup off of the OTE long sweet spot tag. So, you know, here's a great example of, you know, you have a setup that's given you the 3-to-1 risk reward. It's probably in your best interest just to take the trade at the level, right, which in this case, it wiped out that fib too. Look at it, it just did it again. So frustrating. Look at that. I have no idea how far that goes to. How frustrating. Anyway, something like that, right? And you know, here's the thing, right? Is if you had a coin toss, right? If you were playing a coin toss game with your friend, and you said, every time you toss the coin, if I win the toss, you have to pay me $3. But every time you toss the coin, you win, I pay you $1. Would you take that bet? I think I would. Because even if you were right, even if you didn't even get 50% of the coin tosses, let's say you only got like 40% of the coin tosses, you would still come out ahead. Because your guy has to pay you $3 every time you're right versus $1 for when you're wrong. So, you know, my attitude is, you know, I think, you know, let's assume that it's just 50-50, right? So 50% of the time when this level's traded to, and this is the bot setup, so we go... Right, so the bot setup says you go long at 457, your target's 479, that says bull ABCD, and you say, look, if it breaks these lows, then I get out, and I just walk away. You know, my attitude is that more than 50% of the time, the 479 level will be traded to before the 449 level is traded to. So, you know, I would be willing just to take this setup and just say, you know what, whatever happens, happens. And if I get stopped out, well, so be it. If I hit my target, well, so be it. You know, my risk reward is in my favor. And, you know, even if I'm right, 45% of the time, which is booking a lot of losses, I end up still making money. So, very hard to do, though. Very, very, very hard to do. And it'll be interesting. You guys should just watch this and see what happens to this setup. You know, see if this bull ABC level is tagged. Even just jot down in your notepad. CRInvestor likes 479. If that's hit, then that's a 3-to-1 risk reward over the trade setup. You know, and then just plot how many times does it do it. So just to finish that thought on the S&Ps. That fund manager said that, you know, they actually did the study, and it turns out that just throwing darts against a wall is perfectly fine, and it's just as accurate as any other system out there, just as long as when you win, you get paid more than twice than when you lost. Fascinating. Absolutely fascinating. And it just goes to show that you can pretty much throw a lot of this analysis out the window when it comes to actually trading for profit. Really, because all that matters, like I said before, is that when you're right, you get paid twice as much as when you're wrong. Anyway, okay, so it's now about 10 after. 420 has lots of sports. So let's just see what that looks like. I wanted to just to reference that. You notice this, the top of the OTE 4-hour zone is this 61.8, 419.07. And I've noticed that Bitcoin loves to tag these 61.8s and then reverse. So, here was an example where, basically, well, I guess we got down into the OTE sweet spot. Here's an example where it tagged that 61.8 and reversed. Over time, there are other ones that we can see. It's probably not the best example, but 61.8s love to be tagged by Bitcoin. So, the fact that the order book has a whole bunch of orders sitting there, what was the number? 420 even, 418. So that's all right around that 61.8 level. So really, that doesn't surprise me one bit. So that's a good observation. Well done. Okay, let's see how we're doing. So, thank you so much for sticking around today, Brian. I guess Landon, his computer blew up. Boo. And thank you everybody on the YouTube channel for sticking around and enjoying. It's now about 1/4 after. I would usually just open the floor up to questions at this point. So Brian, if you do have any questions, or anybody on the YouTube channel, if you have any questions, feel free to ask. Other than that, we may just wind up a bit early here today.
I'm thinking of questions. I'll probably have some, but I'm thinking I should probably just save it for after the show.
Okay, 6 to 1, half dozen the other. Zip, zip, zip. Look at this. So now we're turning. Look at the little way. Isn't that interesting? So we've this isn't really trading plan related, but I talked, Brian, you probably remember this earlier. I talked about market structure whenever you're using these indicators, and the easiest tool to discern bullishness is to look for W's, right? So that's a horrible W. See if I can do that a little better. Boom, 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 boom. All right. So you can see on our Williams percentage R indicator, we're getting a little W come in. It's only 6:14. This is an hourly chart, so this bar's got 45 minutes to go. It's a bit early to declare a bull just yet, but it'll be interesting to see how this hourly bar finishes, because that might be setting up for a little bit of a rally here. You can see price action here, eh? We're trying to get above these two moving averages. And nice little double bottom. Probably see that on the 15-minute charts. Yeah, very, very little. And it's interesting that I did a seminar today on candle patterns. So you wonder, are there any candle patterns that you can use? And you could argue this is what they call railroad tracks, chung chung there. So a reversal out of this zone itself actually represents a trade setup. So, your long comes from a move through that high, 458.80, with your stop through that low, 455.80. That's not bad. That's $3 risk. Looks like that's still working. It's like another railroad tracks here. So slowly working its way back up the wall of worry. Lots of bearishness, though. But interesting, there's a gap right here that needs to be filled. There's another gap right here that needs to be filled. So, and that often happens on the 15-minute charts where you get lots and lots of sort of short-term bullish and bearish readings. And as a day trader in crude oil, you know, I could trade this and then sell the gap here and make money on the day. Trading Bitcoins, you don't have enough leverage to actually make money doing that. It's too difficult. All right. So I'm going to pop over to the YouTube channel. How are we doing over here? No more comments? All right. If you got a question or a comment, get it in now. Well, the going's hot. Look at this, just trying to reverse. So if you got a bullish resolution and it forced these moving averages to all cross bullishly, that would probably be a very good signal. That's a lot to ask for right now, but we'll see. What does that order book look like now? So 458 to 460. Pretty chunky buys. Ooh, lots of bid there at 456. And not much on the offer, eh? Look at that. Pretty thin on the offer. Wow, nothing. Interesting. So not a lot of coins for sale. That is especially interesting given the whole China news. Because I've often wondered, I wonder how this Bitfinex will be affected by that. All right. Well, I think I've given enough time for questions to be asked, and I don't see any new ones. So I think we ought to probably just wrap this up. This has been a shortened CRInvestor and LowPro's Trade the Plan show for Saturday, April 26th. I've been going now for about an hour and 20 minutes, so not bad. Hopefully you got some good value out of today. Today was, of course, all about what does a trading plan look like. I showed you what my sort of typical investor plan ought to look like from the course that I wrote. And I also showed you what my day trading futures trading plan looks like, trading crude oil. So feel free to peruse both of those. You're more than welcome to read up on my entire course that I wrote on how to invest. And basically the heading of it is Introduction to How Capital Markets Work and Building an Investment Plan. So it's relevant to any investors or traders, and really your plan is as good as you're going to be. So you got a good plan, odds are you probably do pretty well. Of course, the plan has everything to do with your personality, and you know that plan, you know, literally when you read your plan, it should be kind of like you're just reading about yourself. You know, what is it? Who am I? What is it I want to do? I'm a retired senior citizen, and I want to protect my nest egg. I'm a 21-year-old engineer, and I want to take over the world. Doesn't really matter. I mean, this document should reflect who you are. Should obviously contain, you know, lots of commentary on what the current investment landscape looks like, what sectors you should be in, what sectors you should avoid, what are my very specific criteria for buying or selling something, do I have realistic risk-reward objectives, what kind of percentage risk am I taking with my trading stake over my overall assets, and what kind of dollars am I specifically working with my stake, and does the trade that I'm interested in taking, will it represent more than a 5% hit to my stake if the trade goes against me? And then, of course, lastly, as I said, am I ready, willing, and able to commit 100% to my plan? Very, very important. All right. If you have gotten value from today's presentation, I encourage you to pop over to therationalinvestor.ca. All of this information is basically free to access just by clicking on the seminars. You can also take individual. This whole course is broken into individual modules. And then I have a special section on just slideshows on specifically how to use a lot of the technical tools that I use. So you're more than welcome to check those out. If you appreciate the information that's been given to you and the commentary, you're more than welcome. You're more than encouraged to help good old CRInvestor out build his Bitcoin fund. I'm up to 1 full coin now in donations. Thank you very much, everyone. And all your help is greatly appreciated. All you got to do is click on the donate button, head over to follow the blockchain prompts, and away you go. So, without any further comments, I'll just take one more quick boo. Thank you very much, Oystein. I appreciate that. So obviously the whole karma thing is working, so that's awesome. Thank you, Oystein. And I think we'll bring it to an end there. So I'll keep this Google Hangout open. If you do want to pop in and ask me a question after the show, I'll post the address here in the comment field of the chat on YouTube. So there it is. But I think we'll wrap it up. Again, this has been CRInvestor and the LowPro Trade the Plan show for Saturday, April 26th. By all means, have yourselves a great evening. Good luck in the markets. If you need help, you know where and how to get a hold of me. And all the best to you and your family. So good night, all. Thank you very much. Thank you, Brian, for participating with me tonight and helping out in the lounge. And all the best to you and your family. Good night, all.